Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of the Weekly Grade with Stephen Cress, where we're going to be diving deep into all the things happening in the financial markets so you don't have to. Now, without further ado, Stephen Cress, VP of Quantitative Strategy here at Seeking Alpha. He is the wonderful guy behind a lot of the amazing products we have here on site, our Alpha Picks portfolio, our Pro Quant portfolio, and our Quant Growth and Income portfolio. So those are doing a lot of great numbers in terms of how they're measuring against the S&P 500. So if that's something you might be interested in, go ahead, take a look, and also click the follow button on Stephen's profile. Check out his articles, see if there's anything in there that might resonate with your portfolio. So, Stephen Cress, thank you so much for joining us today.
Hey, Nicole, thank you so much for organizing this. I really appreciate it.
Absolutely. Now, I want to dive right in. I see here that the data showing that stocks that are carrying a quant cell rating have historically underperformed against the S&P 500 by about 480% since 2010. So with that in mind, and with the recent market volatility, just triggering a lot of different types of emotions. How does this long term track record kind of prove the importance of using objective data to really make those decisions when it comes to guiding your investing?
Yeah, I'm actually really pleased that you're highlighting this. We of us always focus on our strong buy and buy recommendations, and I think as many viewers know, we have a terrific record with our strong buys outperforming the market, the S&P 500, as well as Wall Street analysts. By a pretty significant margin. What very few people know, though, are the stocks that we have a sell or a strong sell on significantly underperform the S&P 500. And the importance of that is twofold. One, if you're a hedge fund or you participate in shorting stocks, you know our stock recommendations do very well on that side. But more importantly, we often discuss we have a GARP strategy, which is growth at a reasonable price. And we measure each company on a sector relative basis. So we try to identify the strongest companies and the weakest companies. And this really tells you that our model works quite well. So you have the performance to the upside with the quant strong buys, but by being able to exhibit that our sells and strong sells underperform the market, it also displays that we accurately forecast companies that have poor fundamentals and typically what happens to their performance, which as you can see is in the negative domain and significantly underperforms the S&P 500. So it shows you really from top to bottom, our model does what it says on the tin. We look for companies with good fundamentals. Those typically perform well, and stocks with poor fundamentals typically perform poorly. So I'm really pleased that you asked that. Thank you.
Absolutely. Now, I see here that we're giving Lululemon a strong sell rating. So, as a high conviction strong sell with this bottom tier momentum grade of an F, and given that this was a former COVID-19 kind of market darling at over
Mhm.
200% back in 2020, what are the primary forward-looking metrics on this scorecard that are really signaling that this is an extreme downside risk for investors?
Well, I think there's three investment characteristics that indicate you really need to stay away from the stock. And if you own it, maybe even consider selling it. So when you look at the factor grades on the right hand side, you can see the growth is a D. And again, these are sector relative. So that means compared to the sector, its growth rate is underperforming the sector. So you really don't want to be invested in stocks that have poor growth rates. The second factor is the momentum grade is an F. And that means compared to the consumer discretionary sector, that the price performance of the stock is significantly under that of the sector. It's underperformed the sector, which means this company versus the sector must be doing something wrong or have the wrong products, in that its stock price is underperforming the rest of the sector. And lastly, the revisions are analyst EPS revisions. That's a D minus. And it shows you that analysts are reducing their estimates. And you can see that they've reduced them fairly significantly versus 6 months ago when that grade was a B, now being in the D territory. So again, sector relative, and our EPS revision grade looks at the number of companies that, um, the number of analysts, I should say, apologize, the number of analysts that move their estimates up and the number that move it down. And if you see a D grade, that typically indicates that more analysts are moving their estimates down than up, and especially relative to the sector. So there are three factors, three investment characteristics that look pretty poor and would guide our quant system towards a strong sell.
All righty. Well, one more thing before we get out of here, Steve. I know we have something coming up here. Our Top Stocks H2 2026 virtual event happening on July 14th from 12 p.m. to 1:30 p.m. Eastern Standard Time. So, for any investors that are going to be tuning in, what structural themes or screening adjustments are you going to be really diving into and focusing on to kind of capture that next wave of outperformance as we go into the second half of the year?
Yeah, it's a pretty disciplined process. Looking for companies that are collectively strong on growth, value, profitability, momentum, and positive EPS revisions. So that's a pretty consistent factor. Typically, when I do this, and it's one of my favorite events of the year, twice a year, once in January and once in July, I'll highlight my top 10 favorite stocks. And it's not exactly along the lines if you went to the quant screener that you would see it in exact sequential order. I'm typically trying to add a little diversification, and the companies typically have a growth bent to it. If I see that there are four companies that are in the same sector, I will move on to a stock in the next sector. I also look for a little diversification in terms of market cap as well as sector. And I do believe that diversification over a period of time helps to minimize risk and maximize your returns. And we have a really good track record. Last year, our top 10 stocks are up 90%. And even this year in January of 2026, the top 10 stocks that we selected then in January through the end of June were up almost 70% on average. So we certainly do have a very good track record at it. And I hope everyone can join us tomorrow on the 14th at 12 o'clock Eastern Standard Time, where I'll reveal my top 10 stocks for the rest of this year. And it will be the same recipe. I'll be looking for stocks that are collectively strong on growth, value, profitability, momentum, and EPS revisions.
All right. Well, I think we'll leave things there. For everybody that's listening in, go ahead, click the follow button on Steven's page on the Seeking Alpha website. Look into Alpha Picks, look into the Pro Quant portfolio, and also look into QGI, our quant growth and income portfolio, our newest product here. And also, if you're interested, go ahead, sign up for our Top Stocks H2 event happening on July 14th, and we'll see you next time. Thank you so much. Now, for a quick disclaimer here, I have past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Thank you so much, everyone.